The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast, where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us.
Welcome back, everyone. I've got Alan here with us today, and he's the CEO of Home Loan Experts, a brokerage based in Sydney that helps clients who may be struggling to get a home loan. He has over 20 years in the mortgage space. Before we get into today's episode, where we're going to talk all about the first home guarantee scheme, we're just going to chat about our money wins or losses. What's yours for today, Alan?
My wife and I love to travel, and we're fortunate enough that we can get to do it. But what we do is we don't use credit. So when we're on our current trip, what we'll do is figure out where we want to go next and build a savings plan so that we can make sure we're using our own money when we travel, because we're conscious that using credit doesn't help when we're building a house at the moment. So for us to have applied for a loan and have had plenty of credit from travel wouldn't have been a good part for the process. Yeah.
When you say credit, do you mean like personal loans or also credit cards?
Credit cards generally, yes.
Awesome. Okay, yeah. Interesting. I'm a big credit card fan for some of the rewards points, but I know it can harm your borrowing capacity, but I guess we'll get into that later. Mine is also kind of travel related. I'm usually a Virgin fan completely, but I flew home with points yesterday using Qantas.
Right.
And that was fun because I got to go in the business lounge, not just the regular Qantas Club lounge. That was a super fun experience.
Very flash.
Yes, yeah. Going back to that bit about borrowing capacity, what other things affect someone's borrowing capacity?
So things like the number of TV subscription services they have.
Oh, okay.
Because anything that actually stops you from saving money has an impact on borrowing capacity effectively. So your living expenses day to day will have an impact. How you generate your income will also have an impact on borrowing capacity. So, for example, with emergency services, nurses, police and the like, most lenders will use their overtime as part of their income, regular income, and that goes to borrowing capacity. But if overtime, for example, isn't a regular part of your income, you may not be able to use it. So there's a whole range of things that actually go into borrowing capacity. The biggest thing, though, of course, is living expenses, and the banks basically do a forensic dive into living expenses these days.
Yeah, interesting. So with the overtime, if you do overtime consistently, can you use it, or is it just like usually no overtime?
It depends on the lender. So every lender has different policies, credit policies. So you just need to make sure that the lender does accept regular overtime as part of income. Yeah.
Okay. Do you have a credit card ever, or are you completely anti-credit cards?
We do have one. I'm like you, I like the points. So we pay all our regular bills on the credit card, things like that. Tolls, because I live in Sydney where there's toll roads everywhere.
Oh, yes.
So regularly comes out of our credit card. So yeah, we do have one, but it's generally for those living expense pieces, and then we pay it off.
Yeah, I have one property at the moment and I'm planning on buying a second this year, but it's been interesting because now I'm fully self-employed and I have a company, but I pay myself regularly now. And that's been interesting figuring out how that works, because I feel like I got a loan really easily when I had 2 regular jobs and they were like, yeah, you're cool. But now it's like, oh, we don't know now.
Yeah, there are lenders that specialise in self-employed. So I would recommend, you've probably got a broker. I would recommend talking to your broker and seeing which lender's best going to suit you. But being self-employed can make the process a little bit more difficult. But there are lenders that specialise with self-employed customers.
I used to be an occupational therapist and I kind of regret not getting a loan back then a year ago, I guess, because you can get, what is it, like the no LMI if you have a 10% deposit with some healthcare? Yeah, that's pretty good.
Yeah, it is a good offer. Yes.
Yeah. Jumping into today's episode, though, you're here to tell us all about the first home guarantee scheme. All these schemes have such big names as well. What actually is it?
So the first home guarantee scheme allows first home buyers with only a 5% deposit to borrow up to 95% without paying lender's mortgage insurance. Effectively, the government is guaranteeing that 15% of the loan.
Mm-hmm. And what's lender's mortgage insurance?
So lender's mortgage insurance doesn't protect the customer. It actually protects the bank in case of default.
Yeah.
So we hear a lot of people go, well, that insurance protects me as the customer. It actually doesn't. So it's actually a protection for the banks because they're willing to go beyond 80% in terms of borrowing. And at last 80 or the last 20%, I should say, they deem as risky, and they want to make sure that they've got insurance to protect themselves.
Okay, so with this scheme, it's the government guaranteeing it instead of the lender's insurance people?
Yes.
Awesome.
Yep.
I've heard it referred to as the home guarantee scheme as well. Is there a difference between the home guarantee and the first home guarantee scheme?
So within that scheme, there's actually 3 different schemes. So there's the first home guarantee scheme, which is for first home buyers. There is what is known as the regional first home guarantee scheme. So that's buying into regional areas. And then the home guarantee scheme is for single parents with at least one dependent. So there are actually 3 different schemes that all do similar things.
Okay. I saw the single parent one, I think, pop off my TikTok the other day. Is that true that you only need a 2% deposit for that one?
Yes. Yep.
Okay. So home guarantee is for single parents, first home guarantee is for first home buyers in cities, and then there's a regional first home buyers as well.
Yes.
Okay.
Yes.
Why is there regional and a first home buyers one?
Because there's different limits on the property price.
Okay.
So maximums that you can borrow up to.
Okay, awesome. So we'll go to the first home guarantee scheme. What's the eligibility criteria for that?
So there's a range of criteria. So you can apply as an individual or as a couple. One of the applicants must be an Australian citizen. Both applicants must be 18 years of age. If you're a single applicant, the income threshold is $125,000 per annum. And if it's a joint application, it's $200,000. It has to be owner-occupier, so it cannot be for investment. And you can't have owned, or you have to be a first home buyer, or for the other schemes, you have to have not owned a home for at least 10 years.
Okay, so for the first home buyer one, never at all, but for the single parent one, for the last, how many was it? 10 years?
Last 10 years, yeah.
Yeah, okay. What are the price caps? So you've said there's a few different ones. What's the price cap for the first home buyers?
Yeah, there's a range, and it's based on the state that you're in and whether you're buying in a capital city or regional area or the rest of the state. So, for example, in New South Wales, in the capital cities and regional areas like the Central Coast, Wollongong, Newcastle, the maximum is $900,000. But for the rest of the state, it's $750,000. It then drops down. Victoria's $800,000 and $650,000. It then drops down another $100,000 for Queensland, and then finally another $100,000 for Western Australia, South Australia, and Tasmania. And I think it's actually the similar for ACT as well.
Okay, it's definitely a good idea to go have a look at the website to find the up-to-date numbers for definitely income and the cap. Yeah.
Yep.
So if someone decides that this is for them, they want to try and apply, what are the key steps to actually go and apply for this scheme?
So first and foremost is understanding which lenders are part of the scheme, because that will help you to go through, because there's 2 parts to the process. You actually have to get approved for the loan, and then you actually have to get a spot in the scheme. So understanding which lenders are part of the scheme. So, for example, not all 4 of the big 4 are involved in the scheme, but then there's a range of smaller credit unions, regional banks, etc., that are. So going to one of those banks and going through the process of applying for the loan, getting a pre-approval, and also at the same time through that lender applying to the scheme as well.
Okay, so you need to find a lender that will do it and then apply for a loan, get pre-approval, and then apply for the scheme again. And then to make things...
Yeah, we don't make things easy in this process.
No. And then if you want to use the First Home Super Saver scheme as well, if you can use that too. I know you have to save it for a few years and then get a determination and then apply to actually buy the property. So lots of steps going on. Yeah,
the super scheme is a little bit more complicated because it involves super. The first home buyer scheme actually sounds complicated, but it's not really. It's just like applying for a normal loan. It's an extra piece of paperwork effectively, which is the form that goes off to the government.
Yeah, awesome. And can mortgage brokers help you with that form and help you with the process?
Yeah. Yes. And speaking to a broker is probably a great idea because even though the scheme is run by the government, of course, the banks all have their own credit policy. So where you might get a loan with one lender, you may not get that same loan with another. Mm-hmm. I was going to say they also all assess borrowing capacity differently, right? So they will use different parts of income and things like that. So understanding which lender will allow you to borrow the most that you can is also important through that process.
It's all sounding, apart from the extra paperwork, because we all don't love extra paperwork, it's all sounding pretty positive. You can put down 5%, you don't have to pay LMI, you can get into your home quicker possibly. What are the downsides? Like, to me, it seems like you can borrow less if you've got less for deposit. Are there any others?
It would depend on a number of things. So we say a 5% deposit. The banks will want to see that as genuine savings, generally speaking. So money regularly saved into an account. Some might use rental payment history and things like that. But you actually need to understand that you need that more than 5% because you do have other costs associated with buying property, right? So you've got to pay conveyances fees, depending on not whether you're eligible for the state-based first home buyer schemes with stamp duty waiver, you may have to pay stamp duty. So understanding that the 5% deposit is not the maximum that you need to save. It goes beyond that just to get into the property.
Mm-hmm.
Realistically, it's what we would say is making sure you set yourself up for the loan is probably the important piece, and doing it early in the new year because those 35,000 spots don't last long.
How quick did they run out last year?
It's interesting at the moment because I think people are struggling to find property, so they've probably lasted longer than they would have normally. So I think there were still lenders that had the spots available right up until the end of the financial year because people were actually struggling to find property to get into. So I think that helped. But if the market suddenly gets busy and there's a lot more stock on the market, those for 35,000 spots can disappear very, very quickly.
Okay, and they release the spots every July, every new year?
Every 12, yeah. At this stage, every 12 months. I don't think they've announced what will happen next financial year just yet.
Okay. And you said some lenders still had spots. Are the 35,000 allocated across lenders, or is it just like there's 35,000 no matter which of those lenders you go with?
There are caps for each of the lenders, so they will have a certain amount of spots, is my understanding. And it tends to be more towards the smaller regional lenders rather than the three big banks that have all the spots.
Mm-hmm. Do you find that the banks that do have the spots have high interest rates and it's sometimes not the best offer to use it?
No, because generally speaking, the loans are the same. There are some lenders that will have higher interest rates for higher LVR loans, so where you're borrowing more of the loan against the value of the property, but it's only negligible. It's not huge differences. And I think there was a rule for these lenders to be part of the scheme where they couldn't have extremely different pricing for these customers either.
Okay, that's awesome. I remember, this is a bit off topic, but ages ago when they had the Key Start loans that I saw being advertised, is that the shared equity?
That was in Western Australia, yeah.
Oh, just in Western. Okay, yeah, I'm from WA. That's where my first property is. And I saw lots of those pop up on real estate, and they seemed to have quite high interest rates when that was going on.
Yeah. And governments across the country have done similar schemes over time. I mean, I bought my first home through Home Fund in New South Wales, and that was a scheme that was similar, right? At the time, interest rates were at 17%.
Wow. Glad it's not there now.
But irrespective of what happened, your repayments went up every year in that scheme. So the whole point was for you to get your property, and then refinance to a mainstream lender after a few years. But yeah, that's how I got my first property way back in the day.
So for this one, it's not like that where you need to have to refinance out of it. You're just trying to pay it off so the government no longer has to guarantee it. Is that kind of the goal?
For the first home guarantees? Yeah. So what I would recommend doing is even as you structure the loan, thinking about how you pay that 15% down as fast as possible. You can even do it so we can set up a loan so it's split. The 15%, which is guaranteed by the government, you can have higher repayments on that one to pay it down quicker, and then keep the other 80% at the normal repayments if you wanted to. So there's ways to structure it so that you can help reduce that 15%.
Can you refinance while the government's still guaranteeing it, or do you need to stay with that same bank until you've kind of left the 15%, I guess, or paid it off?
Yeah, it would depend on what happens to the value of your property. So there's two ways to get the government out quickly. You get more equity, the value of your property goes up, so therefore the loan to value ratio drops, or you pay the loan down faster. But whilst the government's got that guarantee, you would have to stay within the lenders in that scheme, I believe.
Okay. So going back to, you mentioned genuine savings. You said that's regular income and people can use their rent payments as genuine savings.
Yes.
Is that true?
Yes. So there are some lenders that will look at the regular savings plan. There are others that will look at the rents that you pay, the historical rents, and if that equates to that 5%, they will actually use that as a form of genuine savings. There are other forms of genuine savings, so sale of shares and things like that. And the only time it's really not included as genuine savings is when it's a windfall. So you win the lottery or something like that.
Mm-hmm.
Yeah.
Or your parents gift you some money, those lucky people.
So it's interesting. So parents can gift you the money, but it has to have been sitting in your account for 3 months.
Oh, okay. That's not very long, I guess. You just have to plan a bit far ahead.
Yeah, so if people are planning around this stuff and your parents are willing to give you a gift, put it in your account 3 months well and truly in advance. And there's a scheme rule, but this is about making sure that you're setting yourself up to get a loan approval through the lender. Yeah.
Mm-hmm. Are there any actual downsides to the scheme? So we've kind of talked about the fact that you have to go with certain banks. There's only 35,000 places. Are there any other downsides to it?
Not really, other than the fact that you have the government guaranteeing it. Probably the biggest one is most lenders, if you've got more than 5% and you are wanting to retain some money, most lenders won't allow that, right? So what most lenders will do is give you a maximum of, say, 6 months living expenses as money for covering essential repairs. But if you've got, say you've actually got 20% saved, but you only want to use 5% of your savings, you won't be able to in that scheme. That's probably the biggest downside.
Interesting.
Yeah.
Yeah, because I put down a 20% deposit for my apartment because back then I didn't really know about any of the other things going on. And sometimes I reflect and I'm like, oh, I wish I hadn't have done that because my interest rate is still locked in quite low. But yeah, hearing that, it's like, oh, maybe I would have had to use my savings anyway then.
It depends on the scheme. So with this, what the banks working with the government are trying to do is make sure that they are protecting the government, so if you've actually got that money available, they want you to use that before the government gives that rest of that guarantee.
Mm-hmm. And I've heard of some people getting a bit trapped in some of these schemes or only paying 5% and then not being able to refinance and being quite stuck, I guess, because the property has gone down in value or not increased enough.
Yeah, so, I mean, there are mortgage prisoners at the moment, undoubtedly. So those customers...
Oh, yes, that was the phrase I was looking for.
Yeah, so those customers who have borrowed at a high LVR, so at 95%, and their borrowing capacity was really, really tight, so that the loan was only just servicing, those clients may be struggling because particularly if they took out a loan a couple of years ago when they were assessed, interest rates were much lower. Right. Of course, now that the cash rate's at 4.35, we're actually assessing them at an interest rate of 7.35. So that has an impact. Yes.
Yeah, it's huge. It's crazy to see how quickly your repayments go up with just a few percent. Because when you just look at it, you're like, oh yeah, 2 to 6 is like nothing. But then you look at that, like doubling some people's mortgage repayments. It's crazy.
Yes. Yeah, absolutely. We've seen some people go more than double. Yeah.
Really? Crazy.
Large loans. Yes.
Yeah, okay. When I look at how much of my mortgage is actually being paid off, like the principal versus the interest, it's still a lot of the interest. And it's like my mortgage repayments are $900 a month. I'm quite lucky there. But I think the interest payment is $500 and my actual mortgage repayment is $400, which is just crazy.
Yeah, it is. Yeah. In the early years of a loan, you're probably better not to look at how much you're paying down. It's generally after 5 years or so is where you start to see some change. And then, of course, if interest rates do reduce, what I would say to you is maintain your repayments where they are.
Mm-hmm. Yeah.
Because that becomes advanced payments.
Yeah. Yeah. Okay. Yeah. I've luckily got mine locked in until next year, so I'm very lucky there.
Well, hopefully the rates come down by next year.
Yes. Hopefully I've missed all the high ones. Do you have any success stories or examples of clients who've used this scheme successfully?
Yeah, so we had a young couple that were looking to build, and they were really struggling to think about or find out how much they could actually borrow. So I think that they had a combined income of about $144,000, and these days that's probably not a lot because this young couple lived in New South Wales. But they found a block of land that they really wanted. They did have some savings, but what we were able to do was help them with securing a loan using their rent as genuine savings as well. And they were able to borrow just over $700,000 and build their dream home. So,
amazing.
Yeah.
Wow, that seems like quite a lot on $144,000. That's amazing.
It does,
very
doesn't
exciting.
it? Yes.
Yeah. I see so many myths going around on TikTok where it's like, well, why don't the banks consider my rent as saving towards my mortgage? But it sounds like they do in some circumstances.
Do. Yeah, some do.
Yeah, okay.
Yep. Yeah. The thing, and for some people, the rent that they're paying these days may be higher than some mortgage repayments.
Yes, rents are going insane at the moment when I have a quick look and it's like, oh yeah, 2 bedroom for $800 a week. Like you could easily buy somewhere for that. Yeah.
Yeah.
Do you have any lesser known tips or strategies for someone wanting to maximize their chance of actually getting a place in the home guarantee scheme or the first home guarantee scheme?
Yeah, so the biggest one is, what is it? We're at the 18th of July. Do your tax return, because part of the process is the government will want your notice of assessment to verify your income and that you fit within the income caps. So do your tax early is probably the biggest tip, because if you don't have that notice of assessment, you won't get a spot in the scheme. And given we've just flipped over to the new financial year, they will want your tax returns for financial year 2024.
Okay, that can get a bit complex because with some of like the shares and managed funds, they don't report your stuff to the ATO until like August. So yeah, a hard one to balance that.
Yeah, it is. Yeah, very hard. So understanding that though, that you actually won't get a scheme spot until you have that notice of assessment is probably the biggest thing. Then it's the normal stuff around getting a loan. So making sure you're paying your credit card, any credit on time. You don't have huge gambling coming out of accounts and things like that. So it's just the regular stuff that you would consider as part of a normal loan application.
If you are just gambling in moderation, is that still looked down upon by the banks? If it's
It just
like
becomes part of your living expenses. Yeah.
Okay.
Yeah. They would consider it as part of your living expenses under entertainment.
Okay. Do they ever look at that and they're like, oh no, that's a bit more of a risky spending category?
They will look at the type of gambling, the frequency of the gambling, how much is actually being used, and things like that. Yeah, so it does come into consideration.
I hear some people say Afterpay doesn't affect your credit score. Do you have any thoughts on that?
Afterpay doesn't affect your credit score. What it does is affect your borrowing capacity, because the lenders will treat it like a loan.
Mm-hmm. And how does that work? So they assume you've borrowed the maximum amount that you can?
Yep. Yeah, and then they'll work out, same as a credit card. So if you've got a credit card and you're not paying it off every month, they'll take 3% of the limit and apply that as the cost each month.
Okay. If I'm paying on my credit card off every month, do they still add that 3% on, or do they just, okay, cool.
Some
Maybe
banks will, some banks won't. It's different with different lenders, but there are some lenders that if you're paying your credit card off every month and you can demonstrate that they'll just look at what the regular expenses are that go through the credit card.
Mm-hmm. Are there any other top tips you have for increasing your borrowing capacity? So you've got like pay your credit card off on time or pay it off, don't have Afterpay.
Yeah,
any other ones?
Definitely don't have any afterpays. That's a big one. Pay your credit cards off on time. Look at your living expenses. So I know in our household at the moment, I think we've got about 6 TV subscription services. It all adds up. So thinking about where you're spending your money is important. Making sure you can demonstrate a savings plan is a big one as well. Because the banks are effectively lending you their money. They want to know that you can repay it. So if you can demonstrate savings, that's a big part of it. And yeah, it's just the regular stuff as part of that normal loan process.
If you are thinking about buying a home maybe in 3 to 6 months, how far back will the bank look at your statements? If you decide to live really frugally for 3 months, is that enough?
That won't be long enough, no. So we get 12 months worth of statements. So so as part of our process, so with brokers, they're required to do their own assessment first and foremost. So we get 12 months worth of statements. Banks will probably, depending on the client, some will ask for only 6 months.
Okay.
But I think what will happen over time as we all get better with using data, it will become 12 months automatically. And if you're getting a loan with your existing bank, they can see everything anyway.
Okay. So that's interesting with like if your parents gave you money 3 months ago, that's okay. But then they look at 12 months of living expenses.
Yeah, because that's for genuine savings, not necessarily living expenses.
Okay. Interesting. I've got a few quick questions from our audience, our community. Someone said, I know stamp duty differs by state, but would love to know if this impacts the scheme at all.
No. So the state schemes run beside the federal government schemes. So for a first home buyer in New South Wales, for example, I believe that the 900,000 cap in Sydney it just goes over the cap for full waiver of stamp duty. So you might be eligible, you might pay some stamp duty in New South Wales, but the schemes run separately. So if you're a first home buyer in New South Wales and you're using that 5%, the guarantee scheme, and you're buying a property for $700,000, it would mean that the state government would go, you don't pay stamp duty on that property either.
Yeah, awesome. So you can really start stacking the schemes. First home buyers grant, the first home buyers, like the stamp duty waiver, this scheme, use the first home super saver as well. We just did an episode on the first home super saver. If anyone wants to listen to that, it should be out before this one as well. But yeah, there's so many options for people now.
Yeah, there are. Yep. And then, of course, you can, so if you don't want to go through the government scheme, there's ways you can work with your parents for a family guarantee and things like that as well.
Okay, interesting. Next question. I've already bought a home overseas. Am I still eligible as an Australian citizen?
For the first home buyer scheme, I believe you would be because the property isn't in Australia. So provided you haven't owned property in Australia, you would still be eligible. The interesting thing is some lenders won't even look that you have property overseas. Some will want to know that you are making the repayments and things like that, but it just depends on the lender. But my understanding of the scheme is if you haven't owned property in Australia, you are still eligible.
I heard you mention earlier that you had to be an Australian citizen. Can can PR residents get it?
No, one of the applicants actually has to be a citizen. So,
okay, interesting.
Yeah.
Someone else said, would my partner being a beneficiary to his family property make me unable to claim?
Ooh. So him being a beneficiary, he's actually not the owner at the moment. So they're probably...
I don't think so, no. Yeah.
No, so they're both probably eligible. It's only once if the property was to be transferred into his name, that he would then lose his eligibility. But the other partner, if they wanted to still apply, they might be able to do it in their own name as well.
Okay, so they couldn't do it jointly, but they can do it as one individual?
I think they could still do it jointly now because he hasn't actually got any property in his name. So he's not on any title anywhere. So that would mean he's eligible for the scheme. But once that property was transferred into his name, he would no longer be eligible.
Mm-hmm. So many complex little things in here. So it's definitely worth chatting to someone who deals with it every day.
That one, I don't think I've actually ever heard that one before.
Yeah, I get so many very specific personal questions, I guess, but in all of these situations, I'm not a broker, but you guys are, so it's definitely worth chatting to a broker about this stuff, and they can go through all the pros and cons.
Yeah, most good brokers know the schemes inside and out. They can talk you through the process. They know where you'll be eligible and not eligible. They'll know which are the better lenders to go to maximise borrowing capacity and things like that.
Yeah, I think brokers are so great and very helpful. There's a little bit of a stigma around brokers, I still find, because they get lumped in with financial advisors sometimes. Are you guys completely free to use, or do you charge fees?
We're free. The banks pay us. So, that's the whole proposition of being a broker is you don't charge the client, the banks pay you. Brokers are effectively a distribution channel of the lenders. We are impartial. We don't get paid any differently for going to different lenders. So, working with a broker is probably, I work in a brokerage and I have a broker, and I've been in mortgage industry for I don't know how long. So the thing I would say with working with a broker, the same with a financial planner, is find someone you trust.
Mm-hmm. Yeah, definitely. I found that really hard when I was buying my first property because I was only 22, and I found there was a lot of almost judgment, oh, where's your boyfriend? Where are your parents? I wanted to get my fixed 5-year loan because I was interest rates aren't going to be this low forever. Why would I not do that? But everyone was oh, you're so young though. Are you sure you want to lock it in for 5 years? And that was kind of the attitude I got from a lot of them. So I found that quite challenging, but there are so many lovely ones out there.
Yeah, there are. Yeah, it's like any industry. You'll have some good ones and you'll have some different ones.
Yeah. What type of clients do you guys usually help?
So we help anyone really. So we'll help people that may have some bad credit. We'll help expats living overseas, first home buyers, people that are really, what we pride ourselves on is we get deals done for people who have been knocked back elsewhere. But effectively, we work with investors. We're working with people in the medico field. So we've got doctors and the like in our books as well. So we'll work with anyone, but we really pride ourselves on helping those people who have been knocked back elsewhere. Amazing.
Thank you so much for joining us. This has been a great chat. If people want to use your mortgage broking services or your company, where can they find you?
www.homeloanexperts.com.au.
Easy.
Yeah,
if you just Google home loan experts, it comes up very quickly.
Yep. If you Google home loan experts, hopefully we come up on the top of the page.
Yeah, I was reading your Google reviews just before. They're all very good.
Yes. Yeah. We're proud of the work that our brokers do.
Awesome. Thank you for joining us.
Not a problem. Thanks, Tash.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests or me at Ana Cristina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing, so make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.